Hey everybody, Signa here, and today I want to talk about a tick chart. All right, this is going to be one video out of a series of videos. In this video, I first just want to introduce what a tick chart is. So every time a transaction happens, that is a tick. All right, and what we want to focus on here is how many transactions does it take before we get a new bar? Now, why would somebody want to do this? Well, if you think about, say, a wiki market, let's look at InBev. So InBev is a penny stock and it doesn't get a lot of transactions. You can see, for an example, that 20 seconds went by before there was any transactions at all. And then, before that happened, it was quite a bit of time. So it's just not getting a whole lot of transactions done. And if we look at these candles, well, there's not much there to read. And for those of us who want to trade reading price action, we actually need price action that we can read. So a 5-minute chart just isn't getting that done for us. How about if we go to a 1-minute chart? Well, that really didn't help us out very much either. This really doesn't offer us much to read, right? So if that isn't going to work, well, what else do we have? We have a tick chart. This is a 250 tick chart. Well, as you can imagine, there's not a lot of transactions going on in this little itty bitty penny stock. So 250 transactions, that's just too much. Let's knock that down to 50 transactions and see if that works. Okay, well, we're getting a little closer. Let's knock it down a little bit more and make it 25 transactions. Now, what this is doing is every time there has been 25 transactions, we get a new candle. We also can adjust the details so that it can explain to us how many transactions we've had and how close we are to getting a new candle. So for an example, down here in the lower right, it says that we have 19 out of 25 transactions done at this point. So the next time and sales moves, we would expect to see this move, right? Right now we are at 2:45 in the afternoon and no transactions. We're just waiting. Okay, we just got a transaction. In fact, we had a number of transactions, right? We went from 14:45:06 to 14:45:29. And when that happened, how many transactions did we get? 1, 2, 3, 4, 5, 6, 7. We had 7 out of that. Now, we just hit 25 out of 25. So the next time we see transactions, it should actually give us a new candle. And there we go. We had transactions happened. We got a new candle, and we've had 8 out of those 25. So tick charts are transactions. Every time we get another transaction, it counts towards the number of ticks that we want to see. Well, how do we know what number we want to see? Now, that's a little more difficult to answer. It really depends on what you're looking at. So here is SPY, and SPY is one of the most liquid products out there. It's heavily traded in stocks, options, and the S&P is represented in the futures market. It is a very, very liquid product. And so as you can imagine, it's having transactions happen constantly. While I'm sitting here talking, we can see that these numbers are just moving extremely fast, right? They're coming in just really quick. So if we're looking at transactions set to 25 on SPY, that's really fast. Let's dial that back to 250 transactions. So now we're backed up. We're looking at it from a distance, and we can see actually the start of the day, and we can see where we are now. So it's not a wildly stretched out chart, but the argument could be made that there's still just a lot of maybe some wiki, not so nice looking price action here. Maybe we want to clean it up a little bit more. So let's go a little bit deeper, and instead of using 250, let's try 500, right? Let's go 512. All right, so now we've got a little bit better. It's almost starting to look like maybe a penny, or excuse me, a 1-minute chart. but that may be a little too small still for some people. So you know what? Let's scrunch the side up here because we don't need that anymore. We understand what tick charts are now. We scrunch that up and let's go a little bit higher. Let's call it 4,000 to 500. Well, you know what? That's not too bad, right? We're going to open this side back up and we're going to get rid of a lot of this other stuff in here so that we can have a chart. And on that chart, I'm going to put it on a 5-minute. So I've got 5-minute on the right, and I've got 4,500 tick on the left. Let's drop that down a little. 2,000 ticks seems like a good number. And we'll zoom in on that. So as you can see, the 2,000 tick, it's not exactly like a 5-minute chart, but they have a lot of similarities, right? We have that little roll over there, and it's matching right there. We have that little micro double top there. It's matching here. And we've got that angled support line there, and it's matching right there. So they're kind of similar in their shape and their scope and their size. What else do we have? One of these would probably need to be adjusted a little bit if we want to get closer to that 5-minute chart, right? Or if we want two charts that look a lot alike. So let's go ahead and bump this just a little bit. And instead of 2,000, we're going to go to 2,250. We're just adding a few more transactions to the chart. And you know what? It's looking a lot closer. Now, my goal here isn't to mimic a time-based chart. That's not what I want to do. But I did want to represent how we can change the shape of that tick chart to make it look a lot like some other kind of chart, if that's what our goal is. The main takeaway that I want to focus on with this video is, what's a tick chart? A tick chart is a transaction, and we choose how many transactions we want to see in every single candle. The reason that this is going to become important is when we try to read price action, some days the candles are just too big, or on InBev's situation, they're just too small. There's not enough transactions happening in there to give us a proper candle. So what ends up happening if we stay on one time frame all the time, for an example, a 5-minute chart, and we don't get a good, clean, solid trending market, you get a chart that looks like this. And then you're thinking, man, I'm having a hard time reading that. There's just really nothing there. It's a lot of wicks. I'm not seeing any good signals. If I could have traded this, if I could have read this, I probably could have traded it. But I don't really have a lot of information here that I can work with. This isn't really good price action. Now, as soon as we started trending on that day, sure, we had great price action. But if you're going to read price, you actually have to have something to read. One of the benchmarks that I use is how big is the candles on the particular time frame that you're reading in today's price, right? Should I change my chart? Basically is what I'm talking about. And the way that I do it is I count back 10 candles. So there's 3, 4, 6, 8, 10. There's 10 candles. And in those 10 candles, I generally look at the biggest one and I ask myself that question, is that too big? And am I looking at price action that I find difficult to read? And if my answer is yes, if my answer is that candle is too big, or if I find all of this difficult to trade, then it's time to choose a different chart. This is really important because this is where a lot of people get confused when they're newer. We were told to go to a particular time frame, right? And there's some really famous traders out there, and they only use one particular time frame. They'll stay on like a 5-minute chart, and they'll do all of their analysis, all of their trading. Everything they do is right there on the 5, and they make you believe, and they'll even say things like, we don't want to trade any other chart but this 5. And okay, I mean, that might work for some people, but really consider what you're trying to do and then consider where you're struggling. If the candle is so big that you can't stomach the risk, or if the candles are nothing more than a chewed up piece of bubble gum that isn't giving you anything to read, what's your choice? That you stand aside and don't trade, or that you change your chart to a time frame that gives you something to read? Now, here on this particular chart, on this particular time frame, we've got some pretty good sized candles. I want to know, how big are these candles? That's a $1 move on a 5-minute chart. And here was another one. That's a 90-cent move. And another one, about $1. Another one, $1. So what am I getting here? That right now, the average outsized move is about a $1 movement in a 5-minute candle. And if that was too big for you, or if you're finding that difficult to read, then we need to go to something smaller. These big candles, if they get too big, they're basically worthless for you, right? So let's go down to a 1-minute chart. What is the average candle size on this 1-minute chart? Well, there's a reasonably decent size candle, 40 cents. And we've got one alive right now that's 31 cents. Here, 41 cents. Right? So we're seeing some pretty good size candles here, between 30 and 40 cents. And we can ask that question again. Are these candles too big for us? Is this price action that I can read? And I mean, look at the price action. Is this offering you something that you could work with? And if the answer is no, well, for all those traders who tell you stay on the 5 or stay on the 2, or, they give you a number, stay on the 15-minute. Their solution to a problem like this is, well, I guess we won't trade. There's just nothing to read here. Okay, I'm not arguing with them. But how about this logic? How about these candles? These are really big candles too. Are you going to tell me that you're going to sit out of that? Now, it is true that we can read this better, but they're still really big candles. And if the candles are too big, how are you supposed to get in? How do you know that it's safe to get in? Look at the size of this one-minute candle. That's 54 cents. That's a very big candle. In fact, when we're talking about big candles, let's actually go out to a daily chart. Look at the size of these candles. These are really big candles. What are we going to do with this price action when they're just so big? Well, what's our solution to the problem here? Do we stand aside and not trade? They say out in the, all the gurus out there, that a higher time frame chart has more validity, the patterns follow through better, the outcome is better, the technical analysis is better. Well, let's use that logic for a moment. If that's true, how come all of us are not trading on a monthly or a yearly chart? Right? Right now we're on a daily chart. How come we're not using a monthly chart? If this is the best price action that we could read, that it's the most valid with the best outcomes because it's the highest time frame, then why are we not trading this? Well, it's a pretty obvious answer, right? We're not trading it because the candles are really big and we can't see what's going on inside of there. That's exactly right. We can't see what's going on inside of there. We need to see inside of this candle. Well, that's a monthly candle. So if we wanted to see inside of it, we could go to a weekly candle. Okay, we're looking inside that month, but these are still really big candles. All right, well, let's go to a daily chart. Now we're seeing inside that week. It's still too big. Okay, we can go to a 1-hour candle. Still too big? I could argue, yes, that is probably pretty big. It's great for technical analysis, but where are we going to do our trading? Same thing with the 15-minute chart. Really great for technical analysis. Where are we going to do our trading? Is this a good spot to get in? Where do we put our stop? Is there inertia or momentum or trend? we can't see inside that 15-minute candle. So I don't know. A lot is happening inside of that. Well, let's take it down to a 5-minute. How about now? You know, there's still a lot going on in there. And I'm sure inside of that really big red candle right there probably could have had some great trades, but it happened in such a wide space that we just didn't have any information. Let's mark out these two really big candles. I'm going to go to the left side and the right side of that big candle. And we're going to go to the left side and the right side of this really big candle. Now, just to make sure we're in the right spot, I'm going to put a bubble on each side so that we know where our lines are. Now, let's look at it on a tick chart. And we're going to drop those ticks down a little bit. Let's go to 250 ticks. Look at what was happening inside of that candle. Now, this is something that I can read. This is something that I can work with, right? We can see where we lost support. We can see where the break began, and we can see what we hit. Perfect. Even the rally, even the recovery up off of that. And then we were in a range-bound market here, and we broke the range, and there's my other two lines. And look at that price action. Now, that is price action that I can read. That's price action that I can work with. If we go back to that big old 1-minute candle, 5-minute candle, come back inside here, these two really big red bars did not offer me something that I could trade, right? Or let's say I could trade them, but there wasn't much to read with it, right? Here again, let's grab this big blue bar here. And just to uncomplicate things, we'll get rid of these other two lines, right? So now we're just looking at that bullish move. How about that bullish move here on the tick chart? There's the bell. We're done for the day. So now we can see that rally up and that big blue bar presented with some clarity. We could trade this. So now you can hopefully see why a tick chart has something of value to offer you. And it doesn't have to be these very small time frame charts either. I use two different numbers in my trading. Generally speaking, I use a 4,500 and I use a 250. And it really just depends on what kind of trading I'm trying to do. Here's the S&P futures, the ES futures. And we're looking at a 4,500 tick chart. I'm pretty comfortable with that number. I like it. But this is where I do a lot of my analysis, and it's where I make a determination of where my trade is going to be. I don't necessarily trade this chart. This is just where I'm doing my work. Once that work has been done, then I go to a different tick time frame, or a different tick. Time frame really isn't the word we want to use there. I go to a different number, and I approach it from what I want to do for my entry. So for an example, here's a 5-minute chart with that same mark. And if I was looking for my entry, notice that here on the 5-minute, it was just a big drop. And then it was just kind of junk. But if we look at it on the tick chart, look at what that had to offer us. We actually had some clarity. Notice how it tried to retest up there and it failed. And then, oh boy, it really started to go. Now that's some price action that we could work with, right? So this video was only to introduce what tick is. And in the upcoming videos, we're going to dig down in how I use it and how you could use it in a way that suits you. All right. That's really what the purpose of these videos are going to be, is to get you to understand that the right tick time frame is not going to come from you asking somebody else, right? It's going to be from you going in and finding the number that suits you. And I'm going to help you do that in the next video. I look forward to seeing you, and I will complete the series in the next one.